But what should be your strategy in the markets amidst this volatile times? Where are we headed and which sectors you should focus on? Let's try to decode all of that with Mr. Pramod Amthe, who is the head of institutional equity research at InCred Capital, joining us on the show right now. Very good afternoon, Pramod, and thank you so much for your time. Firstly, help us with your take on the markets because the earnings season just got concluded. It seems to be a decent set vis-a-vis the consensus street estimates. What was your take on the earnings, as well as from here on, where do you see the markets headed?
Broadly, I think if you look at earnings season for Nifty 50, the growth is still tepid on the EPS basis at around 5%. Broadly in line with the expectation, so that's the comforting factor. But the broader set of companies, if you look at taking all the 4,000 odd listed companies, the growth is around 9%. So the mid and small caps are definitely giving a better profit growth even in the March quarter, which is similar to the December quarter growth of 9%. Having said that, some of the macro factors have definitely played out well for India, in the sense the last fortnight prediction for monsoon, early onset of monsoon, or similarly the oil prices coming down. So macros are getting much quickly factored into the marketplace, and hence the inclination more towards our bull case index targets are playing out better than the expected in the short term.
Pramod, hi, this is Ankita also joining in. Good afternoon to you. Pramod, I see you have a couple of high conviction stock bets. To name a few, you have Thyrocare, Birla Corp, Shriram Finance, TCS, Bajaj Auto, and Lupin that are your high conviction stock ideas. Tell us what's the rationale behind these high conviction stock ideas, and from here on, how do you see these stocks moving?
So, high conviction is a monthly bottoms up approach which we look at for our 200 stock coverage universe. What we have done for the month of June, the ones which you listed have been there for the last couple of months. What we have done in case of our high conviction ideas is we have booked profit in Adani Port, which has been one of the good performers in the last couple of months as it is near our target price. And risk reward at this juncture we feel is not too much in favor. We have moved out of Cipla, which has been high conviction for last couple of months, because we feel there can be a near-term margin challenges because of the product mix related issues. At the same time, we have introduced a small cap name, Camlin Life Science, which is going to see the stabilization of the vanillin plant, along with the benefit of rights issue, and the imposition of anti-dumping duties is going to give vanillin the substantial upside from the current levels. So those are the three stock ideas which we have done for this month, along with the remaining 17 to 18, of which you've taken a couple of names, where the big outperformers have been for us in the last month, that is month of May, as you rightly called out, is Thyrocare, on a strong visibility of the new franchise expansion, leading to the momentum in sales and the loss-making division turning around on the high-end pathological test is the key driver for Thyrocare. And Birla Corp is more on the mid-cap undervaluation per ton basis is what plays out, along with the some momentum in the cement as seen in the fourth quarter results. Those are the things which have played out for us in these two stocks.
All right, so those are the high conviction ideas as well as the rationale behind it. But Pramod, overall, you have a neutral stance on auto as well as auto ancillary space. But amidst that, Bajaj Auto is one of the companies underperformers to the Nifty. But you have an ad rating there, I believe. Give us some sense there. What is the outlying factor for Bajaj Auto, and why do you like the stock?
So we upgraded two stocks around February, March at the bottom of the market, of which Bajaj and the second one is Samil. Bajaj has seen a decent amount of correction from the top levels. We feel at this juncture, the worst of KTM acquisition news is factored in the current price levels and the valuation. Having said that, the firm has already clearly transitioned itself both into E3-wheeler portfolio. And second is also in case of E2-wheelers, they are neck to neck in terms of the leadership in the electric scooters. The biggest comfort is the neutrality of the corporate margins in spite of handling such a big transition for the company. Even though the investors are a little bit concerned about the market share loss in motorcycles, we feel that can be addressed with the new product launches. And hence, at these current valuation, with the expected addressable market expanding for them with the low-speed scooters and the e-rickshaws, we are definitely looking at mid-teen to high-teen earnings growth for them in the next 2 years.
Okay, Pramod, also I see that I want to talk to you about two sectors. One is IT and the other one is the consumption basket. You have a neutral stance on both these packs. First up, let me take up IT. Firstly, IT, the valuations look better after the correction, the leg of correction that we have seen. Though there are some global headwinds, analysts are becoming constructively more bullish on the IT pack, primarily based on the valuation comfort there. Also for the consumer staples, though you have a neutral stance, do you see consumer staples to pick up now because of the positive triggers, whether it comes from the rate cuts or the food inflation easing, a good monsoon ahead? What is your take on the consumption space and the IT pack?
So recent channel checks on IT indicate that there are still headwinds. The recent restriction in terms of travel to India is going to be a little headwind to close the deals, especially large deals, which have been the drivers of top line for IT, excluding. So we downgraded IT somewhere in early part of the calendar year to a neutral. We continue to hold the same as the full year guidance has not been great encouraging, and the short term headwinds on travel restrictions do play out in the short term. Other than the valuation factor, I think the top line outlook is still dim. So we stay put with that rating. In terms of FMCG, we have been much more selective in the names which we want to play out in the FMCG sector. I would say the broader play in terms of interest rate sensitive are going to be the way we would like to play out is more on autos, where we are neutral, than on the consumption or on the FMCG basket, where we would like to play more on the high end side, which is ethos, and the derivative of the consumption is more on TCPL packaging, which are on the high conviction idea stocks. For us, we have dropped a couple of names in the recent past on the consumption, which we stay put with that, which is basically we dropped out of Pidilite and Marico in the last 3 months from the high conviction list, and no immediate plans to add them back, as we the recovery seems to be more back-ended than the immediate benefit.
All right, Mr. Amthe, with this we let you go on that. Thank you so much for taking the time out, and thank you so much for always coming out with a very clear-cut strategy on the markets and also helping our viewers with some stock ideas as well.
If you like this video, then like, share and subscribe to ET Now.